Hey everyone, welcome back to the channel. So you've checked your rate on Upstart, but the loan offer wasn't as good as you hoped. Maybe the interest rate was too high or the amount was lower than expected. Don't worry, today I'm going to show you how to improve your Upstart loan offer so that you can qualify for better rates and higher loan amounts. So let's jump right into it. Now, first, let's break down what affects your loan offers. So Upstart looks at several factors, including credit score, income and employment stability, debt to income ratio, and education and work history. So understanding these factors will help you to strategically improve your profile. So the second step is if your credit score is on the lower side, so try these tips before reapplying. You could try to pay down existing debts. Also, you want to make on-time payments, because even a few months of consistent payments can help to improve your situation. You also want to check your credit report for errors and be sure to dispute any inaccuracies. Lastly, you can avoid new hard inquiries, because too many recent credit applications can lower your score. So even a 20 to 30 point increase can make a big difference in your loan terms. So the third step, since Upstart considers your income and job stability, higher earnings can lead to better offers. So include all your income sources, or freelance work, side gigs, or rental income. All of those count. You also want to get a raise if possible, because a higher salary strengthens your application. You also want to consider aiding a co-borrower. So if allowed, this can help to secure a better offer. Now, before applying, make sure that all income documents is up to date to reflect your actual earnings. Now, Upstart checks how much of your income goes towards debt. This is called debt to income ratio, and the lower your debt to income ratio, the better your loan offers. So you want to try to pay off small debts, because this can help to improve your DTI. You also want to avoid new loans before applying. So avoid taking on more debts, because that can hurt your chances. You should also want to increase your income, because a higher income automatically lowers your debt to income ratio. Now, a debt to income ratio under 40% is ideal for getting the best rates. Next, if Upstart offers you less than you requested, it may be because your credit profile doesn't support a higher amount. Now, you can try these strategies. You can request a slightly lower amount. You may qualify for a better interest rate if you request a slightly lower amount. You could also try to improve your credit and income first, and then reapply for a larger loan later. Now, sometimes borrowing just a little less can significantly improve your loan terms. Once you've improved your credit, your income, or your debt to income ratio, just wait at least 30 to 60 days before reapplying. Log back into Upstart, click check your rate again, and then compare the new offers to your previous ones. So by following these steps, you should see a better loan amount as well as lower interest rate, or you could see both. And that's how you improve your Upstart loan offers. Remember, small changes in your credit score or income and debt can make a huge difference in your loan terms. So if this video helped, be sure to like, subscribe, and hit the notification bell so you don't miss our next tutorial on how to refinance or pay off your Upstart loan faster. Thank you guys for watching, and I'll see you in the next one.